how the Singapore Nifty is doing right now, just about 11 points higher. And as Prashant always adds, in terms of a health warning, perhaps that's not such a great indicator of which way trade will open. But it's time for Profits Morning Calls with Ashu Sharma. Ashu, good morning.
Morning, Manvi. Let's start off first today with the pharmaceutical sector. Reports coming in on Jubilant Organosis. Buzz in the market that the company is expecting milestone payment of about $350 million over the next 5 years. As far as a licensing deal is concerned, we'll keep a track on that particular stock for more updates there.
It's time to welcome Mohit Meechandani, who's head of equity at Taurus Mutual Fund. Mohit, good morning. Tepid start in trade today, and I know that you believe that this is going to be a polarized market, some gainers and some, of course, which are complete avoids. Which are the names that fall in that complete weak list?
I think a lot of the speculative names have I'm afraid to say, broken down. Typically names which are of weaker either financials or management and have too much of speculative interest. They've kind of got crushed in this latest down move, which at the same time we have a bunch of names making new highs, which are actually backed by earnings growth and hopefully valuation catch up. So to that extent, I believe it's a polarized market. Why get into some of the speculative favorites which give you the blood rush on a day-to-day basis, whereas you can really get your steady gainers with earnings-backed stocks.
Okay, so what are those steady gainers in your opinion?
By and large, they pretty much support the latest quarterly earnings, which would be in your pharma, your auto. Selectively, we're looking at banking. We're also looking at the agro names very closely. So broadly, these are the categories we're looking at.
Mohit, by and large, morning, Prashant also joining in. By and large, you seem to be sticking with a lot of the mid-cap names. Could you just explain the rationale?
You see, a lot of the large caps, in our opinion, are reasonably valued, and we think the first thing is we've got to realize we are in a bull market. And within that, the large caps usually run away first. When they get too expensive, you move over to some of the mid caps, which also have pretty high quality earnings managements. But they're just, by virtue of not figuring in many FII lists or mutual fund lists that have certain cutoffs, those are the names that get largely ignored in the early stages of most bull markets. And so we think that's where the next leg should happen, and that's where the money is to be made incrementally now.
Okay. Just to get some of the portfolio specific things out of the way, Mohit, Mahindra Lifespace Developers is an underweight in your scheme of things. Does that hold true for real estate as a space at large, or it's more of a stock specific issue?
In general, we are underweight real estate, and it's nothing to. We like the space. I think home ownership in India is very, very low compared to even a China. So we think there's definitely a lot of demand out there which will play out over the next 15-20 years. The only issue is that it's a very opaque industry. Too many uncertainties, too many surprises that could loom. And I don't think there's enough of a regulatory environment in that space. So to that extent, it gets very difficult to value or attach some kind of intrinsic growth parameters to any of these companies, which is probably a reason we are underweight real estate. But as a space, I like the business. I'm just not finding a way to play it.
Okay, that's an clear-cut admission as far as real estate is concerned. You like the space because of the demand potential, but you're not happy with the regulatory framework and the disclosures in that space. Take a step back from the sectors and the stocks, really, Mohit, and tell me where we're sitting today. Which way do you think this market will go? Up, down, and either direction, how much?
it could actually do all three. We just don't know which one will happen first. My sense is, like I mentioned earlier, it's a polarized market. So trying to take a call on the market is actually a very humbling experience because we've all gone wrong too often on that. However, there are a lot of stocks which are playing out. They are easier to predict in terms of earnings and valuations or whatever you have. So we prefer to try and play the stock specific game right now, especially when the markets have already moved up so much. And it's not as easy as throwing a dart and that stock will run up. Those days are over. So it's got to be a lot more effort now finding favorable risk reward setups.
Let me try and get an assessment from you on various spaces. Real estate we've touched upon. What do you do with IT? And let's leave large cap IT out of the picture and just focus on mid cap for a moment. Do you have conviction to buy in that space?
Yes, I do. I actually like the IT space because, and again, it's not an across the board there's no blanket approach here. But there are a lot of names that have made headway in emerging or other non-US and Europe markets. Those are the names we like. There are some of them that are making headway in India as well. We like those names from a business growth standpoint. We also like a few names which are cheap on valuations, and they have weathered this recent downturn quite well. So no reason for them to stay that cheap because managements have proved themselves at least over this last down cycle. So there are broadly two areas within IT we like. One is based on valuations and the other is based on those companies that have made headway into non-US and non-Europe markets.
Mohit, before we wrap this up, is it time probably to focus on pre-budget sort of plays, because the market always starts to do that as we get into 2010. The other big theme is going to be the situation when rates start to move up and the rate cycle itself turns. How are you approaching both these factors in an actionable sort of way? Are you doing something?
For the budget, we are not doing anything at this moment. Maybe as we get closer to the event, we may just begin to look at it, but not yet. From a rate cycle turning up standpoint, it's inevitable. It's it's going to happen, and you kind of deal with it when it happens. Because again, it's speculation whether it's going to happen next month or it's going to happen next February. No one really knows. And in any case, I think that might just be an event which causes a short-term reaction, if at all. But if you move that one event day or 2-day reaction out of the way, there are a lot of these rate sensitives that will continue to do well based on earnings. So we continue to look at where the earnings growth lies, and the events will come and go. It's very difficult to play them.
All right, fair enough, Mohit. Interesting point of view. Good speaking with you and getting your thoughts, views and analysis with us here this morning on NDTV Profit. Appreciate it as always. Take that quick break. Our first after market opening. Things are looking a little soft today. 14 points off on the Nifty, 5,043. We'll be back with a lot more.